Hey traders, this is Trevor. It's Monday, June 3rd, just after the close. Really busy day today, and I got three great examples of trades that I want to show what I did, how I did it, and why I did it today, and then talk a little bit about strategy going forward in this really sloppy market. So let's get over here and this is a one-day chart of the S&P. So this is today. Let me just pull it up here. And what I did is I want to talk about leading runners first with an example. All right, so you can see here at 9:52, I bought the 27.55 calls $5.60. So 9:52 is going to be right around this time here. On this candle right here, I bought the 27.55 calls. Why? We'd stretched pretty far below this 10-period moving average and the 50 period. This was actually near support from Friday. We had 1, 2, 3, 4. That was the fifth red candle in a row. This felt like it was a little overdone. Plus, we had been way down overnight in the futures and had recouped a lot of those losses into the open. So this was kind of a smell. What I call a smell trade, a gut trade. This was like, this just feels a little overdone, so let's try to get long. So I bought them at 560. At 10:08, I said, let's add more. This is the excerpt, a screenshot of the Discord chat room, which you can follow for free. 27.55 calls. I added more at 420 at 10:08. So 10:08, that's going to be this candle here. So why? Because, nope, this candle, sorry. Because my first position was here, then we had this really nice candle, long wicks to the downside and the upside. This is indicative of a reversal candle, and that's what we got, right? But here's the runner I want to show. So it's opened at 560, added more at 520, at 10:21. So this candle here, I said, let's close and leave a runner at 610 from a 520 average. That's these two. 520 average, 610. That's a 90-cent profit on 520. That's a good return by itself, right? So then, so we scaled out of some. Then here, a few minutes later, at 27.55s, let's get rid of the 27.55s at 9.90. Okay, so we sold some here at 610. But we always scale out, and this is why. Because look at this thing. It just kept going. It went from this 2750-ish area all the way to 2762. That's 11 handles. That's what took us from a 610 to a 990 exit. And I said, leave one contract as a runner from 520. Why? Because when you sold the rest at 990, you almost doubled your original investment. You got all your money back. This 520 is all house money. This is profit. If we had an actual reversal today and this would have kept going higher, this 520 could have run into, $10, $15, $20, and it would have been free money. I say free because you're playing with profits. You took all your money off the table and made some money at this 610. You made even more at 990. That's a runner. That's how we do it. All right, next, legged into an S&P Iron Condor. I actually legged into two today. I'm going to show you both of them. At 9:38, opened the 27.25.35 put spread, expiring today for $1.20. So let's pull this back up where we can see it. So 9:38. So right here at this candle, wasn't the greatest entry of the day, but I felt like we would come down and maybe test this this open, which was support from last week or from Friday. And so that was the reason I wanted to go ahead and get into the trade. A few minutes later, you can see at 10, I opened the 27.10.20. So even lower, same credit for $1.20 at 10 o'clock. That was this candle here. Why? Because look at the candle. Again, I explained it was like a reversal candle. So I wanted to open puts, way down in this area. So I did that. All right, 10:59. So this is part of the leg in, right? So we get over here, this candle right here. We'd come up to the top, we'd pulled back, reversed higher again, and I said, all right, let's go ahead and sell some calls to Iron Condor this. So I sold the 27.80.90 call spread for 65, and then I opened another one above it. Just remember, I had 2 put spreads. So I opened one call spread at 27.80, another one at 27.85. Just one increment higher, 65 cents and 35 cents respectively. All right, so that's the legging into the Condor. Now here is the roll down strategy that I use when I have to adjust a trade, an iron Condor credit spread that gets in trouble. Okay, so let's get this back up in front of us. At 12.26, so that's going to be this candle here. I said, all right, let's take the 27.10 20 put spread and roll it down to the 27.05, 27.15. Why? Because I knew when I was going to be rolling this 27.25 35 down, and I was going to be rolling it down 5 points to a 27.20, 27.30. That'd make me long the 27.20s. Well, I can't do that because I'm already short the 27.20s. Can't do that in the same account, be long and short the same option strike. So I did, this was like a preemptive roll. So let's move this 27.10 20 down. Paid 35 cents to do it. Got $1.20 to open originally, so still, what is that, 85 cents of profit available. Then I was able to roll, after doing that, I said, let's roll that 27.35 25 down to a 20.30. Paid 85 cents to do it, which, sucked, but still had $1.20 opening credit, so we had, 35 cents there of available profit as well if the trade was successful. Why did I do this at 12.26? Well, here's the 12.26 candle. You can see we broke this reversal candle support on this one. This is the candle where I took action, right? Glad I did ultimately. But this is why. I mean, this thing just fell out of bed, straight down. Sure, it looks oversold, but, that's not a reason to stay in a trade because something, smells oversold. When it's breaking support areas like this with abandon, you need to take action. All right, so that's what we did. Ultimately, both of those trades ended up expiring for profit, and it was a really great day in Iron Condor land. All right, lastly, strategy evolution. This market has gotten really, really sloppy. I mean, this is just today, and look at this. We're up, down, we're up, down, we're up, down. We're all over the place. If we scan back, let's do like a 10-day, 15-minute. I mean, it's pretty evident, like we go straight down, right? All right. And there's gaps, and we're just all over the place here. If we look at this is a 1-year daily chart. I'm going to pull it out a little bit. I'm going to put on all of my moving averages. So this is a daily chart. You can see we came down here, had that nice reversal candle. See how this looks like that candle that I showed you back on this chart? Oh, sorry. 1 day, 5 minute. Remember this one, this reversal candle? Well, that's what we have here. We also held this 150-day moving average, similar to what we did back here. And from here we went from 27.45 roughly to 28.50, basically without stopping. But this thing, we're definitely in a downtrend. I think most importantly, what I want to focus on, I'm going to show you the RSI set. I use multiple RSIs. I use the 2, 3, 5, and 14. 14 is the standard RSI setting. But you can see we closed at a 21 RSI. That's super oversold. And if I just put the 5 and 10-day moving average, you see the 5 days at 27.75. It's 30 points above. It's over 1% above where we're trading. The 10-day is even higher. So that is actually why I went over here at 335 and said, hey, let's buy some 276 calls for June 5th. That's 2 days from now for 70 cents. Actually glad I did, because those are now up about 50% just into today's close. And I feel like we might have a reversal higher, even if it's a dead cat. We don't care. We get our money and we go home, right? But putting all that together, what I need to start doing a better job of in a market that looks like this, I'll pull back here, that's going straight down and just whipping all over the place, is I need to start closing my credit spread, my iron condors, during the day when there's profit available. I had an opportunity to do that today, close them earlier, take my money and go home, and I didn't. And with the way this market is trading, you know, that's what happens. I mean, that's what as you do as a trader is every day you get better, and every day you have to trade the market that is in front of you, not the one you want to trade. The one I want to trade is where I put on my trades and I watch them expire. That's what I typically do. But when vol is high and headlines, I mean, hell, we had a 15-point rally today just on the Fed Governor Bullard saying like, hey, we might cut rates sometime, and then we reversed it back down. When that happens, you take your money and get out and go home. So at a quicker rate. So that's my commitment to myself and to you guys. And thank you for your time. Hope this was helpful. We'll do it again tomorrow.